This week matters for copper, not because of a headline and not because of hype. While silver surged and the dollar weakened, copper did not give back ground. That's the signal. It tells us this move is not emotional, it's structural, and what copper does next will depend on whether that structure holds through a thin holiday week. Before we look forward, we always begin the same way. We review the prior forecast because accountability matters. Last week, we said copper was consolidating constructively, not topping. We said as long as copper held above key support, the market was building energy, not distributing. Copper closed the week at $5.37. That keeps the forecast intact. Now, if you're new to copper, this part matters. Copper is not widely followed yet, but historically, it has been one of the most reliable signals of where the real economy is heading next. Copper doesn't move on fear. It doesn't trade on headlines. It moves because it is used. Electric grids, power transmission, data centers, electric vehicles, defense infrastructure, housing and manufacturing. If something is being built or modernized, copper is involved. That's why copper is often called the metal with a PhD in economics. And right now, copper remains fundamentally supported. Infrastructure spending continues. Grid expansion is accelerating. Electrification demand is no longer optional. At the same time, supply remains constrained. Inventory visibility is limited. Project timelines are stretched. Ore grades have declined. Costs remain elevated. This is not a paper trade. This is a strategic metal repricing. Now let's talk about weekly behavior. Copper does not move with the same clockwork rhythm as silver. Silver is more financialized. Copper is more physical. But during periods of tight supply, a familiar behavior often emerges. Early week firmness tied to Asia and physical demand. Midweek digestion as macro positioning settles. And late week stabilization, not liquidation. This isn't a guarantee, but when that behavior repeats under constrained supply, it becomes informative, even if it is not perfectly predictable. Now let's look at our leading indicators. LME and COMEX inventories remain tight. Treatment and refining charges remain compressed. There is no clear evidence of supply relief. Copper continues to behave like a metal in short supply, not excess. Now the technical framework. On the retracement side, initial support sits near $5.20 to $5.30. Deeper structural support sits near $5 to $5.10. A pullback into these zones would represent consolidation, not trend failure. On the extension side, as long as copper holds above $5.40, upside pressure remains intact. A sustained push above recent highs opens a path toward $5.60 to $5.80. Copper is coiled, not exhausted. Now let's add confirmation. Silver continues to lead the metals complex. Historically, when silver holds strength during reflationary phases, copper often follows. Gold remains elevated. The dollar remains under pressure. This alignment continues to support copper. Now the broader backdrop. Copper is not just a commodity. It is a strategic asset. Energy transition, demand continues. Grid modernization is unavoidable. Resource nationalism limits future supply. Geopolitical risk raises marginal costs. There is also growing attention on U.S. trade and industrial policy. Reports this week pointed to increased government focus on securing critical materials, including copper, particularly in the context of tariffs and supply security. Whether these measures materialize or not, markets tend to move ahead of confirmation, not after it, and even the discussion of strategic stockpiling reinforces copper's role as a national priority material, not just a cyclical commodity. Next week is different. It is a holiday week. Liquidity will be thinner. Participation will be lighter. Price moves can be exaggerated in either direction. That does not invalidate the trend, but it can distort short-term movement. Here is the clear forecast for next week. If the U.S. dollar index remains below 99, copper holds above $5.40 and maintains upside pressure, with potential toward $5.60 and higher. If the dollar stabilizes but remains weak, copper consolidates between $5.20 and $5.50. That would represent a bullish pause, not weakness. If a risk-off surprise appears, copper may retest $5 to $5.10. That zone represents Structural support, not a breakdown. This is not investment advice. It is scenario awareness. Copper remains a volatile market, whether through equities, long-term allocation, or physical exposure. Position sizing matters. Copper rewards patience and punishes leverage. If you're stacking physical copper, silver, or gold, Copper Forecast has partnered with APMEX, one of the most trusted bullion dealers in America. You'll find our affiliate link in the description below. And if you want the monetary backdrop behind this entire move, be sure to watch Silver Forecast. Silver often signals what copper will do next. Be on the lookout throughout the week for Copper Forecast and Silver Forecast, breaking updates and special reports as conditions evolve. So let me ask you, is copper preparing for its next leg higher or pausing before the breakout? Drop your thoughts in the comments. We'll see you in the updates.